poppin', everybody? Welcome to another video, another part of our series, the trading journey that I'm taking you guys all on the brain dump, everything that I'm doing. I'm on episode like 6, I think I've recorded so far. Probably going to be the last one for the day, but today we're going to be talking about time and the importance of time cycles within the market, why the market moves, because this is probably one of the more important videos. Yes, structure can look good, the market might look good, but if the time is not right, we will not move. Time is what drives the market, time is what pushes volatility, and time will be your best friend when it comes to trading. So, first part of time is you need to understand the market moves within 5 different sessions, I believe. We have New York Open, we have New York lunchtime, we have New York PM, we have Asian session, then we have London session. So 5 key sessions, and all these sessions will play a part in your daily bias and your trading every single day. Now, what are these sessions? These sessions are the times, I guess, allotted for the market within different parts of the world. So I will explain them all. Asian session usually on average is the least volatile because New York, which is the financial capital of the world, everybody sleep. New York is sleep, and Asian session is from 8 p.m. up until 12 a.m. And then from there, you have London session. London session usually does provide some decent volatility if you do trade London. I know a lot of people that do it successfully. So London session is pretty good. I don't have anything against it. I don't trade London session because I am sleep around this time. London session for New York or for Eastern Standard Time, that's what all this time is in, by the way. I forgot to mention that prior, but 2 a.m. to, as you can see, 8 a.m. or 6 a.m. I think. 2 a.m. to 6 a.m. I think that is London session. And then from there, you have New York pre-market and going into New York Open, which is right here. This indicator that I have highlighted, which is showing me every single session, is called ICT Kill Zones and Pivots. In order for you to add this to your trading view, all you have to do is go to your indicators tab, go to your community, and search it up right here. Type it in. These are my settings for anybody who wants to copy them. I don't have New York AM highlighted because that's when I'm trading it, and when I'm using this indicator, I do not like to have the colors right directly where I'm trading at. So I keep that off, but these are the main sessions, the main colors that I use just to help highlight them. Blue Asia, red London, yellow lunchtime, yellow PM session for New York. What are the most important times that you should be focusing on trading? If you can, New York Open session is the best. New York Open session is the most volatile because that is when New York starts their day. New York is where the most orders are placed at, the most volatility will come from. And like I said, volume and volatility is your friend. You want to trade when there's volume, you want to trade when there's volatility, because when you don't, you are a lot more likely to get chopped up. The market will not move to your targets as efficiently, and your trades will take a lot longer on average for the most part. Now, how do I use other times aside from this to actually benefit my trading? So as you can see, I just mentioned we have New York Open, which is the best time to trade, which is at 9:30, and then we have all of our other sessions as well. Now, New York Open, how do I trade New York Open? I wait usually 10 minutes. I wait 10 minutes into market open every single time before I place a single trade. Why do I do this? When you look back at, previous New York Opens, let's go to this day. I don't want to go to today because today was kind of weird. Let's go to this day though. Let's just see what we did at New York Open. New York Open oftentimes can provide a lot of fake outs, a lot of strong candles. As you can see right here, we had a very strong wick to the upside before we ended up closing back lower, and then price ended up going back higher. This is very inefficient price action usually within the first couple minutes of the market. A lot of times the market won't actually do what it is intended on doing. So I like to wait that first 10 minutes, and then from there you have a lot more clarity, you have a lot more data to base your trades off of, because every candle tells a story. Like I said in the candlestick video, every candle tells a story, and every candle is more information to help you better dictate your bias and better fixate on the trade and understanding where you want to see the market going. So I like to wait for the first 10 minutes of market open just to help me better understand and better gauge where I can see us going. And then from there, I'm looking to execute at the macro. You might ask me, what is the macro? Macros are the first and last 10 minutes of every candle cycle. What does that mean? You can see here's 10:31. The macro for this would be 10:50 to 11. And then, vice versa. New York Open would be 9:45 to 9:50-ish to 10 a.m. These are the most volatile times you would like to be catching your trades from. The macros are where the market is most likely to pick up speed, pick up efficiency, and really just move towards whatever the draw on liquidity is. Now, today is honestly not that good of an example because we just dumped straight off market open. But you can see here from at 10 a.m., within the first 10 minutes of market open, you will see we kind of just trickled down slowly from here. And then once 10 a.m. ended up coming in, that macro kicked in. You can see price ended up picking up speed. We rallied higher, and we did make an efficient move. And then within those first 10 minutes, and then once we did complete that 10-minute cycle, you can see we kind of slowed up. We started to move sideways a little bit. Kind of wonky, not as efficient. You can see these are efficient candles. Every candle is telling a story. Every candle is moving with purpose and pace. This is not efficient price action. This is barcode. This is chop is what you would call it. Barcode and price action. It looks like you can scan this at the store. That's not what you want. And as you can see, oftentimes around the 10 a.m. macro, this is the most volatile time. 9:50 to 10:10. Those 20 minutes is where you want to look to execute at. 9:40 is also pretty good as well. You can oftentimes see it set up for the 9:50 macro where I like to execute at. This is all my favorite times to execute. Another reason why they are so important is the 4-hour candle close. Now, why are the 4-hour candles so important? These oftentimes are the most telltale signs for the market and what drive the market. Everything is in time, like I said. So that is when the 4-hour candle closes. You can see 10 a.m., 6 to 10. This is the London session candle. 10 a.m. is a New York session candle. So once that new 4-hour candle opens, you can see a lot of orders being flushed into the market. Often kind of like a opening up a floodgate in a way. 10 a.m. is usually opening up a new floodgate. A lot of water flushing into wherever it's opening up into. And that is how you can look at it, because that is where a lot of water will flush into, a lot of orders will come in, and a lot of volume will be in place in the market. The 10 a.m. macro is oftentimes the most volatile. The market likes to move within these 4-hour macro cycles. So every 4 hours, that's where you can see the most volume. If the 10 a.m. macro, 2 p.m., 6, 10, 2, that's London open, which is why it's also pretty volatile, and then vice versa. That's why it does that. These are the most important time cycles in the market. I like to focus specifically on New York Open, which is going into 10 a.m., 9:45 to 10:10, which is my favorite execution hours, execution minutes, and that is how I would advise you to do so as well. Now, if you like to trade slower markets, if you're not comfortable trading the speed, the volume, it's not crazy, but if it's too much for you, maybe look to trade New York PM session, London session, Asian, whatever works best for you. But for me, I would advise New York Open. The highest quality setups, you are a lot less likely to get stopped out and stop hunted, because price will oftentimes move very efficiently, meaning it is going straight to its draw on liquidity. It's not going to hesitate. It's not going to try to fake you out around this time. It's going to make its decision. It's going to be very fast and effective. That is why I like trading New York Open, and that is why, to me, it is the best time to trade. Another thing I want to talk about, every time frame and every candle is basically the same in a way. It is all fractional and price is fractal. Now, what does this mean? Actually, I'm gonna say that for another video. Let me not even get into that for real. But that is how you read your times and why they are important. And yeah, I'm gonna catch you on the next video. I want to keep it spaced out. I don't want to say too much and overcomplicate you. I want to make sure I'm explaining everything as much and as detailed as possible. So if you do have any questions or comments, leave them below, and I will catch you guys in the next video. Thank you for watching. Peace out.